So dollar versus Swiss, this is the same situation for the dollar as I've just spoken about. We've got a geopolitical situation in the Ukraine. We've got the Japanese VAT hike, which kicked in last week, and we've still got uncertainty over the growth in China. So these things are all affecting the dollar. So the dollar Swiss is in a downward sloping trend. It's gradually getting weaker. It is moving down towards 87 level, 87.5 level. It's a very difficult one to buy short term. Medium term, it's definitely a buy opportunity once the dollar does pick up with a target of around 93 or 94. Europe's slightly different. It's further behind still. We're seeing a fragile recovery. Definitely a fragile recovery. The GDP is still negative in Eurozone. However, we're seeing some life coming into the retail sales market. So once retail sales pick up even more, that will feed back into corporate profits. And as a whole, the Eurozone will start to slowly improve. The euro versus the dollar, I would be looking for that going back up towards the 138 level. It was up there just at the tail end of last year and quickly retreated back to where we are at the moment, 135.5. If it goes back up to 138, I'd be a seller at that level. In terms of dollar versus Swiss franc, I like that currency pair too. However, I'd be looking to buy it around the 88.5 level. It's currently around 91, but I'd be looking for a medium-term target of 94 there. The debate is where the split will be between Scotland's oil and UK's oil. Now, historically, the North Sea shelves have been split up between the European Scandinavian countries with the borderlines on the North Sea by means of median line. Now, if that follows and we assume that will be successful, then Scotland would actually be entitled to 90% of the UK's oil fields. In the middle of February, EC President Barroso came out and said that it would be difficult, if not impossible, for Scotland, an independent Scotland, to get into the EU. However, the SNP state that there's no clear evidence that any country would veto Scotland's continuing rights and membership of the EU. So there is actually an argument for many businesses that there's an opportunity, not just a threat. However, given the fact that there's so much negativity from the business community, suggests that the nationalists have not yet prepared a proper plan as to what would happen for Scotland and the business community going forward if there was independence. Bernanke had come in on the 19th of June and state that rates, or suggest that rates have perhaps gone too far. And that calmed the market down again. We've come back into around 2.5% rate. So now people are looking at the tapering and suggesting that perhaps it's not going to be September, it'll be like maybe December or January of next year. And interest rates might even start rising in 2014. Just a few weeks ago, some people were crazily thinking that it might be sometime at the end of 2013, but it should be a bit further out than that. Real estate has had a sharp fall over the last 5-6 years since the start of the crisis. There's now a lot of value, but it's got to be very selective. And dollar-denominated housing will do very well in specific areas like in New York, and in fact in primes real estate in central London and sterling. That will do very well over long term. You're seeing a lot of Asian investors coming in, picking up these properties in London and in New York and Miami, and they'll continue to do so. There's a lot of cash in the world and it has to be used somehow, and buying into weak currencies and into long-term structural plays like real estate is a good move, and that's what all the Asians are doing. Looking at Eurozone, well, that's just a complete mess politically. We've got the Italians, Mr. Berlusconi, causing problems yet again. We've got Spain and Greece, possible corruption issues still. And we've also got Germany, Miss Merkel, who has not yet been able to form a proper coalition government after she got elected last week. So whilst the Asians are absolutely booming, America is starting to get into gear and starting to come to life. But Europe is still a bit of a dead man of the global housing scene, unfortunately, and maybe for some time. Top tip number one would be consider your overall investment. It's not necessary to spend $175,000. In fact, most of us don't have that to spend on a bed. However, in the region of $4,000 to $10,000 or $15,000, you get very, very nice beds. Now, when you break that down onto a cost per night basis, it's $1 to perhaps $3 US. It's not actually a lot of money.